So let us discuss another topic, another standard, which is the PAS 34, which is about interim financial reporting. So what is an interim financial reporting? So basically, this is the preparation of financial reports other than the annual financial statements. So in short, this is the preparation of financial reports for interim periods. So first, let us define what is an interim period. According to PS 34, Interim Financial Reporting, interim period is the financial reporting period shorter than a full financial year. So the most common interim periods that are being adopted by entities are semi-annual, or which covers 6 months, or quarterly, which covers 3 months. Of course, if the interim period is semi-annual, it means that there are 2 interim periods for 1 year. And if the interim period is on a quarterly basis, it means that there are 4 interim periods that is covered in 1 whole year. So the financial reports that are being prepared for interim periods are called interim financial reports. So these are the financial reports containing either a complete set of financial statements as described in IAS 1 or a set of condensed financial statements for an interim period which is described in the standard, which is PAS 34. So what are the contents of interim financial reports? So of course, the content of the interim financial report is still based on what the entity wants to present to its users. So the entity may use or adopt 2 standards in the preparation of its interim financial report. So if the entity wants a condensed financial statements, so the entity will follow the standard on interim financial reporting, which is PAS 34. While if the entity wants to present a complete set of financial statements for interim periods, the entity will use PAS 1, which is the standard governing the presentation and preparation of financial statements for 1 whole year. So first, let us define what is a condensed financial statement. So a condensed financial statement means that each of the headings and subtotals presented in the entity's most recent annual financial statements is required, but there is no requirement to include greater detail unless this is specifically required. Then the other way to present the interim financial reports is to prepare a complete set of financial statements. So the difference between the two is that if the financial reports is condensed, the preparation will be based on PAS 34, which is simple compared to the complete set of financial statements. Again, the complete set of financial statements will be based on PAS 1. If the entity opted the preparation of interim financial reports to include a complete set of financial statements, IAS or PAS 34 does not prohibit if the entity prepares a complete set of financial statements as described in PAS 1. So PAS 1 is applied for the form and content of a complete set of interim financial statements. So again, when we say complete set of financial statement, this is the full blast presentation and preparation of the financial statements. However, when we say condensed, the information or the details presented in the interim financial reports are not that comprehensive and complete compared to the annual financial statements. So the interim financial reports under PAS 34, the frequency of reporting is not mandated by the standard. However, publicly traded entities are encouraged to provide interim financial statements at least semi-annually or every 6 months. So basically, there are 2 views on interim financial reports. So these are integral view and independent view. So when we say integral view, each interim period is an integral part of the annual accounting period. So under integral view, each interim period are necessary or dependent from one another to make an annual financial report for the annual accounting period. However, under the independent view, each interim period is considered as a discrete or a separate accounting period with equal status equal to a fiscal year. So under independent view, Each interim period are independent from one another and can be considered as a different interim period from another interim period during 1 year. So, which of these two views are being applied by the standard PAS 34? So basically, PAS 34, Interim Financial Reporting, adopts or applies the combination of these two views in the preparation of interim financial reports. So in terms of the period covered by the interim financial reports, how do we present these reports? So let's start with the statement of financial position. So for the current period, we are going to present the end of the current interim period. So in this example, our current interim period is the third quarter, which ends on September 30. For the statement of financial position, the balance sheet that will be presented for the third quarter should be the balances at the end or as of September 30, 2000B, which is the current year 2000B. And of course, since we are preparing a comparative financial statements, the interim financial report as of September 30, 2000B should be compared with the prior period financial statements, which is the end of the preceding year. Again, since the current period or the current year is 2000B, of course, the prior year is 2000A. And the end of the preceding year is December 31, 2000A, not September 30, 2000A. Again, the financial statement that will be comparative with September 30, 2000B is December 31, 2000A. Then for the statement of comprehensive income, we are going to present two coverage of the statement of comprehensive income. One is non-cumulative and the other is cumulative. For the statement of comprehensive income that is non-cumulative, it will only cover the 3 months that ends September 30, 2000B. So that is for the current interim period. Again, this is non-cumulative. And for the comparative statement of comprehensive income, this will be compared against the 3 months ending September 30, 2000A. So same date, different year. So that will be a non-cumulative comparative interim financial report. Then the other is the cumulative information. So this will cover the 9 months ending September 30, 2000B. And the financial statements that will be comparative is also the 9 months ending September 30, 2000A. Again, same date, different year. And for the statement of changes in equity and statement of cash flows, so the presentation of these financial statements are similar. So these two financial statements should be presented on a cumulative basis. So since our example is the third quarter, so the statement of changes in equity for the current interim period should be the 9 months ending September 30, 2000B, as well as for the statement of cash flows, which is cumulative for the 9 months ending September 30, 2000B. And the interim financial report that will be comparative is the cumulative report for the 9 months ending September 30, 2000A, both for the statement of changes in equity and statement of cash flow. Again, always remember that for the statement of comprehensive income, statement of changes in equity, and statement of cash flows, when we prepare the comparative interim financial reports, always remember that the dates are the same, however, the years are different. But for the statement of financial position, that is not the case because the prior financial statement that must be comparative with the current interim period is always the end of the preceding year, which is December 31, which is a different date, 2008, which is also a different year. So now let us proceed to the recognition and measurement principle. Let us start with the balance sheet. So for the balance sheet, it says here, we are going to use the same principle as in the annual financial reporting, except for inventories. So for interim reporting purposes, inventories may be carried based on estimates. So on an annual basis, we are presenting inventories based on the actual physical count that is being conducted on an annual basis. However, there are instances that physical count are not conducted at the end of the interim reporting period, so we cannot determine the actual physical count of the inventory for interim reporting purposes. So in those cases or in those situations, we are going to present inventory based on estimates. And of course, in Intermediate Accounting 1, we have studied the methods of inventory estimation, and the most common method that is being used is the gross profit method. So using that method, we can determine the inventory that will be presented at the end of the interim reporting period for the balance sheet, and those are based on estimate. Then now let us proceed to the income statement. So let us start with revenue. So here, for revenue, same principle as in the annual financial reporting. So, of course, for revenue, revenue must be recognized only when it is earned. So that is why seasonal, cyclical, or occasional revenues are not anticipated nor deferred. So we are still following the principle of revenue recognition that revenue should only be recognized when earned. So for example, the current interim reporting period is the first quarter, so that is the current period, and in the last quarter you are anticipating a revenue. So that revenue that you anticipate that will be earned in the last quarter cannot be recorded as revenue during the first quarter because you cannot record the revenue based on anticipation. It must be recorded when it is earned. So now let us proceed to the cost and expenses. So for cost and expenses, so we are recognizing cost and expenses based on two principles. So whether such cost and expenses is directly related or associated with a revenue, or the cost or expense is not directly associated with a revenue. So the cost and expense can be classified into two. So those are the costs and expenses that must be recognized at a point in time, which means it should be recognized on a specific date, or the costs and expenses that must be incurred or recognized during a period of time. So of course, when we say recognition during a period of time, it means that such expense or expenditure, the benefit from which can be obtained for a longer duration. So that is why expenses should be recognized during the period such benefit has been obtained by the entity. Unlike the expenses that are recognized at a point in time, we are recognizing the expense in full on a specific date because after that specific date, there are no more benefit that will be obtained from such expenditure. So that is the difference between the two. Then, these expenses can now be classified whether these are directly associated or not with a revenue. Of course, if the expenses are directly related to a revenue, we are going to follow the cause and effect principle, which is the application of the matching principle. If you still remember, in basic accounting, matching principle states that the expense must be recognized during the same period the related revenue has been recognized as earned. So it simply states that both expense and revenue that are related to each other must be recognized during the same period. So that is matching principle, and that is how to apply the cause and effect. So the examples of expenses that are directly related to a revenue is the freight out. Of course, freight out is a delivery expense. So the delivery expense should be recognized during the period the related sales has been recognized as earned, as well as the disposal cost. So for the disposal cost, this should be recognized as well as expense during the same period the gain or loss on sale from the disposal has been recognized, and as well as employee bonus. So normally the employee bonus is related to a performance indicator of the entity, which is normally the earnings. So that is why the employee bonus expense should be recognized during the period the earnings that is used as the basis for the computation has been reported. Then, for the expenses that are not directly associated with a revenue, so one example is loss on sale or depreciation or amortization. So for depreciation or amortization, sometimes these can be related to a revenue, but there are also times that these are not related to a specific revenue, especially if the depreciation or amortization is related to the admin function of the entity. So how do we recognize these expenses? So for depreciation or amortization, we are using systematic allocation, where we are using several methods in recognition of depreciation. For example, straight line method, double declining method, and the like. Then, for expenses that are recognized at a point in time, we recognize this outright. So these are recognized as expensed immediately. Then use of estimates. So interim financial statements requires a greater use of estimation, especially if actual amounts cannot be measured reliably. So unlike in the preparation of annual financial statements, under interim financial reporting, there are more estimates that are being used because there are instances that actual amounts cannot be determined at the end of every interim period. The most common example, of course, is the inventory. We cannot determine the actual cost of the inventory because we have not conducted any physical count. And in order for us to determine the inventory balance at the end of the interim reporting period, we are allowed to use estimates. So paragraph 36, amounts of income and expenses reported in the current interim period will reflect any changes in estimates of amounts reported in prior interim periods of the financial year. The amounts reported in prior interim periods are not retrospectively adjusted. Since estimates can vary over time, and there are changes in the estimates that have been made in the middle of the accounting period, so the changes or the adjustment to reflect the changes will be made during the period of change. And if there are adjustments to the previously recognized nominal accounts in the previous interim reporting periods, so the adjustments for the previous interim period will be recognized in full during the interim period of change. So that means we will no longer retrospectively adjust the prior interim period. So basically, this is the application of the principle behind the changes in accounting estimates, that accounting estimates should be treated prospectively and not retrospectively. So again, even for interim reporting purposes, the prospective application or prospective adjustment shall still be applied.
So now let us start answering this problem. So first, since we are going to prepare the income statement, so we have two types of accounting elements, which are the revenues and expenses. So before we proceed to the expenses, let us first recognize all the revenues applicable for ABC Corporation. Starting with letter A, so the revenue is the sales. So as we have discussed a while ago, the concepts and principles behind the recognition of revenue for interim reporting are also the principles and concepts that we are using when we prepare the annual financial statements. So basically, there are no differences when it comes to revenue recognition for interim reporting and annual reporting. So let us start with sales. So the sales and collections of ABC Company during the year are as follows. So sales shipped. So when we say sales that are shipped during each quarter, so of course, these are the goods shipped during the first quarter, second, third, and fourth quarter. So let us skip the collections and proceed to the next information in letter A. Sales of 10,000 and 15,000 were in transit at the end of second and third quarter respectively. So this means that the sales of 10,000 pesos and 15,000 pesos were already shipped as of the end of the second and third quarter. Because if these are already in transit, it means they were already shipped, they're just waiting to be received by the buyer. So the entity's shipping term for sales transactions is FOB destination. All sales are on account. So based on the second sentence, the entity's shipping term for sales transaction is FOB destination. So it means that all sales transactions of ABC company should be recognized following the rules on FOB destination, which means that sales to be recorded by ABC company should all sales that were already received by the buyer. And since our information above are the sales that were already shipped, we are going to determine how much of these sales were already received by the buyer during each quarter. So let us start with the first quarter. So for the first quarter, the sales that were shipped in the first quarter is 2.1 million. So since there are no other information with regards to the 2.1 million pesos sales shipped during the first quarter, we assume that the 2.1 million sales shipped in the first quarter were also received by the buyer during the first quarter. And if these were all received already by the buyer also in the first quarter, this is the sales amount to be recorded under FOB destination, which is 2.1 million. So which means these 2.1 million sales were all shipped and received during the first quarter. So let us now proceed to second quarter. So for the second quarter, the sales shipped is 2.24 million pesos. So the question is, out of 2.24 million pesos, how much sales were already received by the buyer? And according to our information, at the end of the second quarter, we have a 10,000 goods in transit, which means the 10,000 pesos sales at the end of second quarter were already shipped. However, it is not yet received by the buyer as of the end of the second quarter. So we assume that it will be received by the buyer in the third quarter. So following the rule on FOB destination, the 10,000 pesos will not be recognized as sales during the second quarter. It should be deducted from the 2.24 million so that we can get the sales applicable for FOB destination, which is 2.23 million. So it means that out of 2.24 million, only 2.23 million sales were already received by the buyer during the second quarter. Now let us proceed to third quarter. So for the third quarter, the sales shipped in the third quarter is 3.36 million pesos. And of course, the 10,000 goods in transit as of the end of the second quarter is assumed to be received during the third quarter. And since we assume that the 10,000 pesos will be received by the buyer in the third quarter, it will become part of the sales to be recognized during the third quarter. So the 10,000 pesos shall be added to the 3.36 million sales. Then, another information is the 15,000 pesos sales or goods that were in transit as of the end of the third quarter. So, similar to the 10,000 pesos, we assume that the 15,000 pesos were already shipped as of the end of the third quarter, but it is not yet received by the buyer as of the end of the third quarter. And our assumption is that the 15,000 pesos will be received by the buyer in fourth quarter. So since the 15,000 pesos were not yet received by the buyer during the third quarter, the 15,000 pesos shall be deducted from the 3.36 36 million pesos. So now let us compute for the sales to be recognized under FOB destination, and that is 3,355,000 pesos. So now let us proceed to the fourth quarter. So for the fourth quarter, the sales shipped is 2.94 million pesos. And since there are no goods in transit as of the end of the fourth quarter, we assume that the 2.94 million pesos were all received by the buyer during the fourth quarter. And in addition, the 15,000 pesos goods in transit in the third quarter will be received by the buyer during the fourth quarter. So that will be added to the 2.94 million pesos. So the sales to be recognized under FOB destination for the fourth quarter is 2,955,000 pesos. So these are the sales under FOB destination that to be recognized for each quarter. And of course, when we prepare the annual financial statements, we are going to consolidate all the sales that were recognized for each quarter. So, for the annual financial statements, the total sales shipped is 10,640,000 pesos. And of course, the in transit is 25,000 pesos, so that is the total. And of course, it has no effect on the total sales to be recognized under FOB destination. So the sales to be recognized for the year is 10,640,000 pesos, similar to the total sales shipped. Because the 10,000 pesos and 15,000 pesos, regardless of the quarter shipped and received, it is still within the annual reporting period. So it means that the 25,000 pesos were all shipped and received by the buyer during the current annual reporting period. So now, after we are done with the revenue recognition for interim purposes, let us now proceed to expense recognition. So starting with letter A. So in letter A, aside from the sales transaction, we are required to recognize a provision for bad debts. So let us read the information. So in prior years, the entity has an estimated bad debts of 3% of outstanding accounts receivable. So it means that the entity uses the allowance method, specifically the outstanding accounts receivable balance method. So on December 31 of the year, the entity revised its estimate to 4%. So there is a change in estimate that occurred at the end of the year. So the accounts receivable balance at the start of the year is 23,000 pesos. So since based on the information, all sales are on account, so it means all our sales for each quarter are on credit. So since these are on credit, this will be recorded under accounts receivable. So let us start with the beginning balance. We have a beginning balance of 23,000 pesos. So it will be reduced by the collections made during the first quarter, which is 2,030,000 pesos, which is in the information given. Then our ending balance of accounts receivable at the end of the first quarter is 93,000 pesos. And again, since the method used by the entity in recognizing bad debts is the outstanding accounts receivable balance method, so the 3% will be multiplied to the ending balance of accounts receivable of 93,000 pesos. So that is 93,000 multiplied by 3%. So the ending balance of the allowance for bad debts should be 2,790. Again, this should be the allowance for bad debts ending balance as of the end of the first quarter, March 31. And since we have a beginning balance of accounts receivable, which is 23,000, we assume that there is a beginning balance of the allowance for bad debt, and that is also at 3% of 23,000 pesos, and that is 690 pesos. So from 690 beginning, it should have an ending balance of 2,790, which means we need to record a bad debt expense during the first quarter for 2,100, so that the allowance for bad debt will have an ending balance of 2,790. So for the second quarter, we will follow the same procedure. So our beginning balance of accounts receivable will be, so of course we're going to compute for the bad debt expense. So we need to compute for the ending balance of the accounts receivable as of the end of the second quarter. So let us start with the beginning balance of the accounts receivable, and the opening balance of AR for the second quarter, of course, is the ending balance as of the end of the first quarter, and that is 93,000 pesos. And this will increase by the amount of credit sales for the second quarter, which is 2.23 million, and this will be reduced by the collections made in the second quarter, which is 2,165,500 pesos. So our ending balance of accounts receivable is 157,500 multiplied by 3%. So it means that the ending balance of allowance for bad debts as of the end of the second quarter, which is June 30, so that is 4,725. And the allowance for bad debt at the start of the second quarter, which is April 1, so that is 2,790, which is the ending balance of the first quarter. So it means that we need to record an additional bad debts of 1,935 pesos for the second quarter. So for income statement in the first quarter, the bad debts that should appear must be 2,100. And for the second quarter, the non-cumulative income statement which will cover April to June, the bad debts that should appear is 1,935 pesos. Then in the third quarter, our beginning balance would be 157,500 as of July 1, less the collections made in the third quarter, which is 3,181,200. So our ending balance would be 331,300 multiplied by 3%. So our allowance for bad debt at the end of the third quarter, which is September 30, 9,939 pesos. Of course, less the beginning balance, which is 4,725. This is the ending balance of the second quarter. So for the third quarter income statement, our bad debt expense should be recorded at 5,214 pesos. Then lastly, so the fourth quarter, our beginning balance is 331,300 less collections in the fourth quarter is equals to the ending balance of 413,300 multiplied by 4%. So this time the revised estimate will be used, which is 4%. So the 4% of 413,300 is equals to 16,532 pesos. And since there is a revision of the estimate, again, there will be no need for retrospective adjustment where adjustments are made for the first, second, and the third quarter. Again, the adjustments will be made only during the period of change and in the subsequent periods. So our ending balance is 16,532. This will be reduced by the previously recorded bad debts, which is 9,939. So we need to record an additional 6,593 pesos. And this is the amount that will appear in the income statement for the fourth quarter, which will cover the operations from October to December. Then for the annual reporting, so the computation of bad debt expense will be based, of course, on the ending balance of the accounts receivable. But let us start the computation of the ending balance. So our beginning balance for the year, which is January 1, is 23,000 pesos. And the collections made during the year, so which means this is the total of all collections from all quarters. So that is 10,249,700 pesos. So our ending balance is similar also to that of the fourth quarter. So that is 413,300 multiplied by the revised estimate, which is 4%. So our ending balance should be 16,532. And the Beginning balance of allowance for bad debts, which is on January 1, is 690, which is the 3% of the 23,000 beginning balance of accounts receivable. So the difference is 15,842, which means that for the year, the bad debt expense that should appear is 15,842, which is the total of all bad debt expense that we have recorded in the 4 quarters of the current year. So basically, bad debt expense is an expense recognized for valuation purposes. And for valuation purposes, as we have discussed, it is similar to the valuation made on an annual basis in the preparation of the annual financial statements. So now let us proceed to letter B. So for letter B, the purchases of ABC Company during the year are as follows. So we have purchases for each of the 4 quarters of the year. So the entity's physical count revealed the following balances. So these are the ending inventory or the inventory balance as of these dates. So the gross profit ratio in the last 3 years are 32, 35, and 38%. So in this case, we are going to compute for the cost of sales that will appear in the income statement, the quarterly income statement, and of course the ending inventory that will appear in the statement of financial position at the end of each quarter. So let us start now with the first quarter. So for the first quarter, we can only compute for the cost of sales during the first quarter if there is an ending inventory given, which is dated March 31 of the current year. However, since there is no physical count conducted on March 31 based on our information, we cannot determine the actual inventory balance as of that date, which is the end of the first quarter. So in this instance, we are allowed to use estimations. And again, as we have discussed, for interim reporting purposes, unlike annual reporting, we are using a lot of estimation when it comes to interim financial reporting. So in this instance, we are allowed to use inventory estimation method. And of course, we have two inventory estimation methods. These are the gross profit method and the retail inventory method. But in this case, we are going to use the gross profit method. Of course, if the problem is silent, any gross profit ratio given is always based on sales. So here we have a gross profit ratio for the last 3 years, which are 32 to 35 and 38. And for this year, we are going to get the average of the gross profit ratio for the last 3 years. So that will be 35%. So that is 32 plus 35 plus 38 divided by 3. So that will be the average gross profit ratio in the past 3 years. And for the computation of cost of sales for the first quarter, of course, using the 35%, we are going to determine the cost ratio. What we need is not actually the gross profit ratio. What we really need is the cost ratio. So the cost ratio, of course, is 65%. Of course, this is only applicable if the gross profit ratio is based on sales. So if the gross profit ratio is based on sales, which is 35, the cost ratio, which is also based on sales, is 65%. So now let us proceed to the first quarter. So for the first quarter, our sales that we have computed based on FOB destination is 2.1 million. So the cost ratio is 65%. So our cost of sales, which is based on estimate, for the first quarter is 1,365,000 pesos. So to compute for the ending inventory, let us start with 20,000 pesos. And let us add the purchases, which is 1,368,000 pesos. So we have a cost of goods available for sale of 1,388,000 pesos. Then let us deduct the cost of sales that we have computed based on the 65% cost ratio, that is 1.365 million. So our ending inventory, which is not the actual ending inventory, this is only based on estimate, is 23,000 pesos.
So the cost of sales that will appear in the first quarter income statement is 1,365,000 pesos, and the ending inventory that will appear in the statement of financial position as of March 31 of the current year, which is the end of the first quarter, is 23,000 pesos. So now let us proceed to the second quarter. So for the second quarter, which ends on June 30, we are not going to use the cost ratio of 65%. And why is that? Because there is a given physical inventory which is at 40,000 pesos. So this is the actual cost of the inventory as of June 30 of the current year. So for this quarter, we are not going to use any inventory estimation method. And also based on this information, the 40,000 pesos inventory counted as of this date has a net realizable value of 38,500 pesos. Of course, inventory must be valued in each reporting date at the lower of cost and net realizable value. So to start the computation of the cost of sales for the second quarter, let us begin with the beginning inventory of 23,000 pesos. Of course, the 23,000 pesos beginning inventory is the ending inventory that we have estimated during at the end of the first quarter. So the purchases for the second quarter is 1,320,000 pesos. So our cost of sales will be dependent on the difference between the cost of goods available for sale and ending inventory. And of course, the ending inventory, which is at cost, is 40,000 pesos. So 1,343,000 pesos, which is the cost of goods available for sale, less the ending inventory of 40,000, we have a cost of sales of 1,303,000 pesos. So in this case, without considering the NRV on June 30, the cost of sale that will appear in the income statement is 1,303,000, and the inventory that will appear in the statement of financial position is 40,000. That is if we do not consider the net realizable value. However, there is a net realizable value on June 30, which is lower compared to the cost of 40,000 pesos. And of course, based on PAS2, inventory should be valued at the lower amount between cost and net realizable value, which in this instance, the lower amount, of course, is the net realizable value. That is why the amount that will appear in the income statement as well as in the statement of financial position will change. So first, let us determine how much should appear in the statement of financial position. Of course, the ending inventory as of the end of the second quarter, which is at cost, is 40,000 pesos. However, its net realizable value is 38,000 pesos. So obviously, the amount that will appear in the statement of financial position is 38,500 pesos, and that is at the end of the second quarter. So we are going to get the difference between the two. So 40,000 pesos less 38,500, that is 1,500 pesos. And we are going to use the allowance method for the valuation of inventory. If you can still remember, there are two methods in the valuation of inventory. These are the allowance method and the direct method. So in this instance, we are going to use the allowance method. So the difference is 1,500, and this should be the ending balance of the allowance for inventory write-down as of the second quarter. So to get the adjustments to the cost of sales, we need to get the change in the allowance for inventory write-down. So let us check if there is a beginning balance for the allowance on inventory write-down. Of course, the allowance on inventory write-down is the difference between the cost and net realizable value at the start. And since the available data we have is the January 1 balance of the inventory, which has a cost of 20,000 pesos and a net realizable value of 19,000 pesos, it means that as of January 1, there is an allowance for inventory write-down balance of 1,000 pesos, which is the difference between the two. Again, the allowance for inventory write-down as of January 1 is 1,000 pesos. That is the difference between 20,000 and 19,000 pesos. Of course, there is only an inventory write-down if the NRV is lower than the cost. So from 1,000 pesos, from 1,000 pesos, which is the beginning balance, the difference between 20 and 19, the ending balance as of the second quarter should be at 1,500, which is the difference between 40,000 and 38,500. So we have already recorded 1,000 pesos and it should have an ending balance of 1,500. It means that we still need to record an additional of 500 pesos to make it 1,500. And since this is an increase in the inventory write down, this is a loss on inventory write down. And if you can still remember, loss on inventory write down is an adjustment to the cost of sales. And if there are reversals in the inventory write down, those are deductions from cost of sales. But for this case, the 500 pesos shall be added to the cost of sales that we have computed here, 1,303,000, so that will be added. So the cost of sales that will appear now in the income statement, which is already adjusted, is 1,303,500 pesos. So let us now proceed to third quarter. So the third quarter, so we have no physical count. So we are going to use the cost ratio. So the cost ratio will be based again on sales. So the sales in the third quarter is 3,355,000 pesos. So multiplied by 65%, that will be 2,180,750 pesos. So to compute for the estimated ending inventory, let us start with the beginning balance of inventory, which is 40,000 pesos. Again, if you still remember, the ending inventory that should appear at the end of the second quarter must now at 38,500, which is the net realizable value, which is lower compared to the cost of 40,000 pesos. However, for the computation of the cost of sales, we are still going to use 40,000 pesos if we are using the allowance method. Always remember that before we compute for the adjusted cost of sales, the initial cost of sales that must be computed must be based on the cost of the inventory, not the lower amount. Again, if the allowance method is being used, the computation of the initial cost of sales before the adjustment must be the inventory at cost, both for the beginning and ending inventory balances. So for the third quarter, we are going to use the cost instead of the NRV. So that is 40,000 pesos. And that is only under allowance method because if we are using the direct method, the presentation is different, but the answer is still the same. Then the purchases is 2,175,000 pesos. So we have a cost of goods available for sale of 2,215,000 pesos. Then let us deduct the estimated cost of sales. Then we get our estimated ending inventory of 34,250 pesos. So if you notice that we only compare the cost and net realizable value, of course, if the entity conducted a physical count. So that is why at the end of the first quarter and the third quarter, we have no comparison between the cost and net realizable value because we have not conducted any physical count. Again, the comparison between the cost and net realizable value is only made when there is a physical count. So for the third quarter, so since we have no physical count, our ending inventory that will appear in the statement of financial position is 34,250. That is as of September 30. Then the income statement cost of sales is 2,180,750. So that it will be for the non-cumulative income statement in the third quarter. So let us now proceed to the fourth quarter. So for the fourth quarter, so since we already have
a physical count as of December 31, we're not going to use the cost ratio of 65%. So instead, we are going to compute the cost of sales based on the actual ending inventory. So let us start with the beginning inventory of 34,250 pesos. So our purchases for the fourth quarter is 840,000 pesos. Then the cost of goods available for sale will be reduced by the ending inventory at 35,000 pesos. Again, as I have said, since we are using the allowance method, the amount of initial sales must be computed based on the cost of the inventory, regardless whichever is lower. So the cost is 35,000 pesos. So the sales before any adjustment is 874,250 less 35,000. That is 839,250 before any adjustments for inventory write down. Then we are going to compare now the ending inventory cost of 35,000 pesos compared to the NRV of 34,600 pesos. And obviously the lower amount is the 34,600. That is why we need to have an ending balance of 400, which is the allowance for inventory write down ending balance. If you notice, the amount that we have computed is always the ending balance because the 35,000 is the ending balance at cost and the 34,600 is the ending balance at NRV. So obviously the 400 should be the ending balance inventory write down. So let's get the change in the inventory write down. So we have an ending balance of 400 and we have a beginning balance of course of 1,500, which is the ending balance as of the second quarter. So this time there is a reversal of 1,100, and again the reversal in inventory write down is a deduction from the cost of sales that we have computed, which is 839,250. So 839,250 less the 1,100. The cost of sales now, which is already the adjusted amount that will appear in the non-cumulative income statement for the fourth quarter, is 838,150 pesos. Now let us proceed to the annual reporting. So for the annual reporting, we will not use the gross profit method. Instead, we are going to compute the cost of sales based on the actual ending inventory because we have conducted a physical count at the end of the year. So let us start with the beginning balance. Again, since we are using the allowance method, the beginning balance that will appear in the computation of cost of sales must be the cost, regardless whichever is lower, which is at 20,000 pesos. That is why if you notice in the first quarter we have used the 20,000 pesos instead of the 19,000 pesos. That is under the allowance method. Then the purchases for the year is 5,703,000 pesos. So our cost of goods available for sale for the year is 5,723,000 pesos. Then to compute for the cost of sales, our ending inventory at cost is 35,000 pesos. So the difference between the cost of goods available for sale and ending inventory is 5,688,000 pesos. So the initial cost of sales is 5,688,000. And the initial ending inventory is 35,000 pesos. Again, these are initial amounts because we need to determine if there are adjustments. And the adjustments will be computed if the NRV is lower than the cost. And again, NRV is 34,600. That is why there is a difference of 400. Now we are going to get the change in the inventory write down. So since this is the annual reporting, the starting balance of the allowance for inventory write-down for the year, of course, the year starts on January 1. So the January 1 balance of the allowance for inventory write-down is 1,000 pesos, which is the difference between the 20,000 pesos and 19,000 pesos. So for the year, the inventory write-down has decreased 600 pesos. So this is a reversal. So if there is a reversal, that will be a deduction from the cost of sales that we have computed. So that will be deducted from 5,688,000. So this is the initial cost of sales we have computed.
So the adjusted cost of sales for the year is 5,687,400 pesos. So this will be the amount that will appear in the annual income statement as the cost of sales, 5,687,400. Then the ending inventory that will appear in the December 31 statement of financial position is 34,600. And always remember, the cost ratio shall only be used in the absence of the physical count. So to check whether the 5,687,400 is the total of the cost of sales in the first quarter, second quarter, which is based on the adjusted amount, third quarter, and the fourth quarter, which is also based on the adjusted amount. That is 5,687,400 pesos.
So now let us proceed to another type of revenue to be recognized by the entity ABC Company. So on January 6, the entity purchased 30,000 shares or a 15% ownership in DEF Company for 300,000 pesos. That is designated as a financial asset at fair value through profit or loss. So this is otherwise called as trading securities. So DEF Company declared dividends of 100,000 pesos on August 1 of the current year. So the fair value per share of the investment at the end of each quarter are as follows. So here, we have two types of revenue that can be recognized. First is the possible unrealized gain from the fluctuation of the fair value of the shares. Of course, the unrealized gain will only be recognized if there is an increase in the fair value. Then the other one is the dividend income. The dividend income is the type of revenue that can be classified as seasonal, cyclical, or occasional revenue because this type of revenue is not recognized on a regular basis like on a monthly basis, just like sales. So dividend income is only recognized if the investee declared dividends. So of course, the dividend shall only be recognized during the month or during the interim period the investee declared such dividend. So in this case, the investee is DF Company and its dividend declaration is on August 1. So technically, the revenue should be recognized by ABC Company during the third quarter, which is the quarter the dividend has been declared. So first, let's compute for the unrealized gain. So for the unrealized gain, this will only be recognized during the evaluation procedures that is being conducted every end of the quarter, which is March 31, June 30, September 30, and December 31. And again, if there is an increase in the fair value, so there will be an unrealized gain. So basically, for valuation procedures, as we have discussed earlier, the same procedure applied during the annual reporting is the same valuation procedure that we are going to apply also for interim purposes. So let us start in the first quarter. So for the first quarter, the number of shares is 30,000 shares. Then the fair value at the end of the first quarter is 12 pesos, which is March 31. So 30,000 shares multiplied by 12 pesos is 360,000 pesos. And this will be compared with the beginning balance, which is the acquisition cost on January 6, which is 300,000 pesos. So, of course, it has increased by 60,000 pesos, which is an unrealized gain. So the 60,000 pesos will be recorded or reported during the first quarter income statement, which is 60,000 pesos, which will be presented in the profit or loss. Next is the second quarter. Again, the same number of shares, 30,000, multiplied by the fair value at the end of the second quarter, which is 13 pesos as of June 30. So this will have a total balance of 390,000 pesos. So the 390,000 pesos shall be the amount to be presented as an asset, specifically current asset, in the statement of financial position as of June 30 for the second quarter. Similar to that in the first quarter, the trading securities to be presented in the current asset section of the statement of financial position for the first quarter is 360,000 pesos. Then, to get the fluctuation in the second quarter, the 390,000 will be compared with the 360,000 pesos ending balance as of the end of the first quarter, which is the beginning balance for the second quarter to determine the fluctuation from March 31 to June 30. So 390 less 360, we have an increase of 30,000 pesos, which is again an unrealized gain. And this will be presented in the income statement for the second quarter. Then for the third quarter, the number of shares is still at 30,000 shares, multiplied by 1250, which is as of September 30. So the total balance of the trading securities that will appear in the current assets section of the statement of financial position as of September 30 of the current year is 375,000 pesos. And to get the fluctuation, the increase or decrease for the third quarter, which is from June 30 to September 30, we're going to compare the 375 with 390,000 pesos. And that is a decrease of 15,000 pesos. So this time we have a loss of 15,000 pesos. And similar to the 60,000 and 30,000 pesos, this will be presented in the income statement of the third quarter. And aside from this, we are going to recognize the dividend income of 15,000 pesos, which is the share of ABC Company from the total dividend declared by DAF Company. So the total dividend declared is 100,000 pesos. And since our ownership is only at 15%, our share is 15% of the 100,000 pesos. So that is 15,000 pesos. Again, for revenue, the same concepts and principles applied for annual reporting shall also be applied for interim purposes. So regardless whether annual or interim reporting, revenue is still recognized when earned. So if the dividend income is earned in August because the investee declared the dividends in August, of course, the revenue should only be recognized in the third quarter. We cannot anticipate the 15,000 pesos in the second quarter by recognizing the 15,000 pesos in the second quarter, for example, because as of the second quarter, DAF Company has not yet declared the dividend. Again, the dividend has only been declared on August 1. So it means that ABC Company only earned the dividend income during the third quarter. Hence, the dividend income should only be reported or recognized during third quarter. So now let us proceed to the fourth quarter. So for the fourth quarter, so the number of shares has not changed, so it is still at 30,000 shares. Then the fair value per share is 14 pesos. So the ending balance will be 420,000 pesos. And this will be the amount of trading securities that will appear in the statement of financial position as of December 31 of the year, because this is already the fourth quarter, which is the last quarter of the year. So to get the fluctuation only for the fourth quarter, so this is the fluctuation from September 30 to December 31. So we will compare the 420 with the 375,000 pesos. So there is an increase of 45,000 pesos, which is an unrealized gain. Again, this will be presented in the income statement for the fourth quarter. So the 60,000, 30,000, negative 15,000, and the 45,000 pesos are the non-cumulative amounts, which means these amounts are only applicable to their respective quarter. Then, Let's proceed to the annual financial statements. So for the annual financial statement, so the number of shares is 30,000 pesos. And the fair value at the end of the year, of course, is the fair value as of December 31, which is 14 pesos. So the ending balance is similar to that of the fourth quarter, which is 420,000 pesos, because basically the end of the fourth quarter is the end of the accounting period. However, since this is already for annual reporting, the fluctuation that we are going to present is the fluctuation during the year, which is from January 1 to December 31. So the 420 will be compared with the acquisition cost, which is 300,000 pesos. Again, we are computing for the unrealized gain or loss or the fluctuation during the year, which starts at January 1 and ends on December 31. So during the year, from 300, it has increased to 420,000 pesos by the end of the year. So we have an unrealized gain of 120,000 pesos. And of course, the dividend income to be presented in the annual income statement is 15,000 pesos. Regardless of the quarter, the dividend has been earned. The 15,000 will still be presented in the annual financial statement, specifically the income statement. Then for the unrealized gain that will appear in the income statement per annual reporting purposes is the 120,000 pesos, which is the cumulative amount of all unrealized gain net of losses that we have recognized during each quarter of the year, which is 60 plus 30 less 15 plus 45. So the net amount is 120,000 pesos. So basically, this is the application of the independent view and the integral view of interim financial reporting. So independent view, because each quarter is considered as a separate period from all other quarters. But for the integral view, it just simply means that each quarter is an integral part of the annual financial statements. So that is why the interim financial reporting applies the two views of independent and integral view. So again, when we say integral view, so the 60,000, 30,000, negative 15,000, 45,000 in this case are an integral part of the 120,000 pesos unrealized gain that will appear in the income statement for the current year. So that is for the independent view and integral view. Again, for the occasional revenue, which is dividend income, so the same concept as we apply in the annual reporting. So dividend income or any other type of income shall only be recognized during the period it is earned. So in this case, the interim period or the quarter, the dividend income has been earned is 15,000 pesos. So always remember that the 15,000 pesos will not be allocated during the first, second, third, and fourth quarter. Again, it will not be allocated. So the recognition principle for revenue is only when it is earned, which is in the third quarter. So let's proceed now to letter D. So the entity is a franchise holder of Twirly Shells Corporation with an initial franchise fee of 5 million pesos for 20 years. The franchise agreement also stipulates a continuing franchise fee of 5% of the entity's sales. So here in letter D, the entity ABC Company has a franchise of Twirly Shells with an initial fee of 5 million pesos, and that will be good for 20 years. So franchise is an intangible asset that is being amortized. So in this case, we are going to amortize the 5 million pesos for 20 years. Then aside from the initial franchise fee paid by ABC Company to Twirly Shells, ABC Company must pay additional franchise fee equal to 5% of its sales. Here we are going to recognize two types of expenses.
So the expenses would be the amortization expense and the continuing franchise fee. So first, the amortization expense. So how are we going to recognize the amortization expense for interim purposes? So the amortization expense is an expense that is being recognized during a period of time. So it means that we are going to recognize this on based on a systematic allocation, and that will be on a straight line basis. So first, let us compute for the amortization expense of the franchise for interim purposes. So let us start with the first quarter. So the franchise again is at 5 million pesos, and to compute for the amortization expense for the first quarter, which covers 3 months, January to March, so we are going to divide 5 million by 20 years and get the 3 months worth of the amortization expense. So that is 5 million divided by 20 years divided by 12 months times 3 months. So the amortization expense for the first quarter is 62,500 pesos. So the ending balance of our amortization as of the end of the first quarter is 62,500. So to get the net book value of the franchise that will appear in the statement of financial position as of March 31 of the current year, that will be 5 million less 62,500. So the book value of the franchise in the statement of financial position as of the end of the first quarter is 4,937,500. And of course, the 62,500 amortization expense shall appear in the income statement for the first 3 months of the current year, and that is the first quarter. Now let us proceed to the second quarter. So let us start with the franchise cost of 5 million pesos. So as of the start of the second quarter, we already have a beginning balance of accumulated amortization. So the accumulated amortization, of course, at the start of the second quarter is the ending balance for the first quarter, and that is 62,500 pesos. And to compute again for the amortization, since the second quarter also covers 3 months, we are going to determine the amortization expense for 3 months, and that will again be 62,500 pesos. So the accumulated amortization at the end of the second quarter is 62,500 beginning plus the current quarter amortization expense of 62,500. So the accumulated amortization ending is 125,000 pesos. And to get the net book value that will appear in the statement of financial position as of June 30 of the current year, that will be 5 million less 125,000 pesos. So that is 4,875,000 pesos. Then, in the income statement, the amount of amortization expense that will appear, of course, is the 62,500 amortization for the second quarter. Then let us proceed to the third quarter. So the franchise again is 5 million. So this time the beginning balance of the accumulated amortization is 125,000 pesos, and that is the ending balance as of the second quarter. And since the third quarter also covers 3 months, so that will be also at 62,500 pesos. So the accumulated amortization ending is 187,500. So the amount of amortization expense that will appear in the third quarter income statement is 62,500 pesos. Then in the statement of financial position, the net book value of franchise that will appear is 5 million less 187,500. So that will be 4,812,500 pesos. Then lastly, the fourth quarter. So for the fourth quarter, the franchise is 5 million, and we will begin at an accumulated amortization of 187,500. So the amortization expense for the fourth quarter, which covers October to December, is also at 62,500, and this is the amount that will appear in the income statement for the fourth quarter. And the accumulated amortization at the end of the fourth quarter is 250,000 pesos. Then the book value that will appear in the statement of financial position as of December 31 of the current year, that is 5 million less 250,000 pesos. So that is 4,750,000 pesos. So again, the 62,500 pesos amortization expense in each quarter will appear in the non-cumulative income statement, which only covers 3 months of each quarter. And this is computed based on a systematic allocation, where we use the straight line method of amortization. So now let us compute how much will appear in the annual report. So the annual report, of course, will cover 12 months, so January to December. So the franchise has a 5 million. Then at the beginning of the year, of course, there is no amortization yet, so there will be no beginning balance. And the amortization expense for the year, which covers 12 months, so that will be 5 million divided by 20 years. So that is 250,000 pesos. Following the integral view, so each 62,500 in every quarter is an integral part of the 250,000 amortization expense that will appear in the annual income statement. So we have an accumulated amortization of 250,000 as of December 31. And of course, the book value that will appear in the statement of financial position year end is also 4,750,000 pesos, which is also the net book value at the end of the fourth quarter, because the end of the fourth quarter is also the end of the accounting year. So now we're done with the expense that is recognized using a systematic allocation method for interim purposes. So now let us proceed with the continuing franchise fee. So for the continuing franchise fee, since it will be 5% of the entity's sales, it means that we are going to follow the concept of cause and effect. So for the cost, it is the sales and the effect will be the expense. So basically, the cause and effect follows the principle of matching principle. So if the cost has been recorded in a particular quarter, the effect should also be recorded in that quarter. And since the continuing franchise fee is based on sales, you need to determine the amount of sales recognized in each quarter, because that will be the basis of the 5% continuing franchise fee. So let's start with the first quarter. The sales that we have recognized in the first quarter based on FOB destination is 2.1 million pesos. And the continuing franchise fee is 5%. So the franchise fee, additional franchise fee, which is an expense account to be recognized for the first quarter, is 105,000 pesos, and this will appear in the income statement. Then for the second quarter, the sales that we have recognized, this is a non-cumulative sales, is 2.23 million pesos. And the 5% of this is 111,500. So again, this will be recognized in the second quarter income statement, following the concept of cause and effect, which is the application of matching principle. So the 2.23 million is the cost, so it is recorded in the second quarter. Hence, the effect, which is the 5% of 111,500, should also be recognized in the second quarter. Then, for the third quarter, same procedure. get the sales, which is 3,355,000 pesos, multiplied by 5%. So our franchise fee expense in the third quarter income statement is 167,750 pesos. Then the fourth quarter, the sales is 2,955,000 pesos multiplied by 5%. So that will be 147,750 pesos. So these are the amounts of franchise fee, continuing franchise fee incurred in each of these quarter. So this will be the amount recognized regardless of the timing of payment of these amounts, because our basis of recognition of expense in the income statement is based on accrual basis, which we recognize expense when it is incurred. And the continuing franchise fee is considered as incurred if we already generated the sales, which is the cost. So the quarter the sales has been generated is the quarter that the continuing franchise fee must be recognized because it is deemed incurred in those quarters. So let us proceed with the annual continuing franchise fee. So of course this will be cumulative, which will cover 12 months. So the 12 months sales of the entity is 10,640,000 pesos multiplied by 5%. So the continuing franchise fee, which is an expense account that will appear in the income statement for the year, is 532,000 pesos, which is the total of the franchise fee recorded in each of the quarter. So let us now proceed to letter E. So the following are the entity's fixed assets at the start of the current year. So we have building, equipment, and land, and the amounts given are carrying costs. Again, these are not the acquisition costs. These are the carrying value, which are already net of the accumulated depreciation. Then the remaining estimated useful life at the start of the current year. So of course, fixed assets are being depreciated for depreciable fixed assets because in case of land, land is a non-depreciable fixed asset, and there will be no problem when it comes to recognition of depreciation for land. So let us just focus on building and equipment. So for depreciation, of course, this is being recognized based on a systematic allocation using the depreciation methods. And since the problem is silent as to the method to be used, we are going to use the straight line method of depreciation. So let us start with the building. So for the building, for the first quarter, our book value at the start of the year is 2 million pesos. And to compute for the depreciation for the first quarter, again, this will cover 3 months. So that will be 2 million divided by 10 years times 3 over 12. So the depreciation expense for the first quarter is 50,000 pesos. And this will be the amount that will appear in the income statement for the first quarter. And the ending balance of the book value or the carrying value of the building as of March 31 of the current year, end of the first quarter, that will appear in the statement of financial position for the first quarter is 1,950,000 pesos. Then for the second quarter, so we will start with a book value of 1,950,000 pesos. And to compute for the depreciation expense, that will also be at 50,000 pesos. And the book value ending will be 1,900,000 pesos. So the depreciation expense that will appear in the non-cumulative income statement, which will cover the second quarter starting April to June, is 50,000 pesos. And in the statement of financial position as of June 30 of the current year, the net book value of the building is 1.9 million pesos. So let us proceed to the third quarter. So for the third quarter, we are going to start with a book value of 1.9 million pesos. And again, similar to the first and second quarter, the depreciation expense using the straight line method is 50,000 pesos. And this will appear in the income statement for the third quarter, which will cover July to September. Then the book value at the end of the third quarter, which is September 30, is 1.85 million pesos. Then for the fourth quarter, the book value at the start is 1,850,000 pesos. And the depreciation from October to December of the fourth quarter is 50,000 pesos. So the ending balance of the carrying value that will appear in the statement of financial position, that will be 1.8 million pesos. And of course, for the annual reporting, since annual reporting starts January, so the January beginning balance of the book value of the building is 2 million pesos. And the depreciation that we have computed from January to December, of course, is 2 million divided by 10 years, which is 200,000 pesos, which is composed of the 50,000 depreciation expense recognized in each quarter. So the ending book value that will appear in the statement of financial position for the year December 31 is 1.8 million, similar to that of the fourth quarter. So now let us proceed to the equipment. So for the equipment, there is an additional information, that is, the equipment has a fair value of 342,000 pesos and 306,850 as of June 30 and December 31 of the current year, respectively. So for this purpose, we are going to compare these fair values with the carrying value that will be computed for June 30 and December 31, and we are going to determine whether there will be an impairment loss to be recognized. And if there will be an impairment loss, so the carrying value will be revised, and of course the depreciation expense will be revised and will no longer be similar to the depreciation expense computed prior to the impairment loss. So in order for us to compute the depreciation expense later on, we need to determine the remaining estimated useful life at the end of each quarter. So let's start with the first quarter. So for the first quarter, so the beginning estimated useful life is 60, and this is computed in months. So that will be 5 years. So 5 years times 12 months. Then, of course, for the first quarter, the number of months that will expire is 3 months. So the ending estimated useful life remaining at the end of the first quarter is 57 months. So that will be the starting remaining useful life for the second quarter. And another 3 months will expire for the second quarter. So the ending useful life remaining at the second quarter is 54 months. So that will be the start of the third quarter. And another 3 months will expire. Thereby, the ending useful life remaining at the end of the third quarter is 51 months. Then, 51 months will be the starting point for the fourth quarter, less the additional 3 months expiration. So the ending useful life will be 48 months, and that will be as of December 31 of the current year. So after this, let us now compute the depreciation expense and the book value of the equipment for each quarter. So let's begin the computation of the depreciation expense for equipment and the book value. So let us start with the beginning book value for the equipment. So that is 400,000 pesos. So as of this date, the remaining useful life is 60 months. So the depreciation expense for 3 months is 20,000 pesos, and that is 400 times 3 divided by 60. So the ending book value of the equipment, so that will be as of March 31 of the current year, so that is 380,000 pesos. Then this will be the beginning balance for the book value in the second quarter. Then the depreciation expense is same
at 20,000 pesos. So that is 380,000 divided by 57 times 3 months. And the ending book value of the equipment for the second quarter is 360,000 pesos. However, based on the additional information, the fair value of the equipment as of June 30 of the current year is 342,000 pesos, which is below the current carrying amount. So the 360 will be compared with the fair value of 342, and there is a decrease which will be considered as an impairment loss for 18,000 pesos. So in the first quarter, the depreciation expense that will appear is 20,000 pesos depreciation expense. Then in the statement of financial position, at the end of the first quarter, the equipment will have a book value of 380,000 pesos. Then for the second quarter income statement, the amount of nominal accounts that will appear related to the equipment includes the depreciation expense, which is 20,000 pesos, and an additional impairment loss of 18,000 pesos. And these are the amounts that will appear in the income statement for the second quarter. And in the statement of financial position as of the end of the second quarter, the carrying value of the equipment that will appear will now be at 342,000 pesos, which is the amount lower between 360 and 342,000 pesos. So when we start the third quarter, the beginning book value will no longer be 360,000 pesos. It will now be at 342,000 pesos, which is the fair value at the end of the second quarter. And just be reminded, we are applying the cost model. So for this purpose, since the problem is silent as to the accounting policy when it comes to fixed asset, our assumption will be the cost model. Now, for the third quarter, when we compute for the depreciation expense, so our remaining depreciable cost is 342,000 pesos. So that is the carrying value at the start of the third quarter because we have no residual value. So similar to the first quarter and second quarter, the carrying value is also the depreciable cost because there is no residual value. So the 342,000 starting carrying value will be divided by the remaining useful life as of the start of the third quarter, and that is 54 months. So 342 divided by 54 months multiplied by 3 months, which will start from July to September. So the depreciation expense for the third quarter that will appear in the non-cumulative income statement is 19,000 pesos. So the ending book value for the third quarter is 323,000 pesos. Then now let us proceed to the fourth quarter. So the beginning carrying value for the fourth quarter is the ending book value in the third quarter. So our beginning balance is 323,000 pesos. Then the depreciation expense will be 323,000 pesos, the depreciable cost remaining, divided by the remaining estimated useful life of 51 months, multiplied by 3 months. So that will be 19,000 pesos. So our ending book value is 304,000 pesos. However, there is an information given with regards to the fair value of the equipment as of December 31, and that is 306,850 pesos. And in this case, the fair value is greater than the book value. So applying the cost model, are we allowed to record the increase from 304 to 306,850? Of course, the answer is yes, because that will be the reversal of impairment loss. So the 2,850 is considered as a reversal of impairment loss, which will be recorded as an increase in the carrying value of the equipment. Again, reversal of impairment loss means that there should be already an impairment loss previously recorded. That is why we are using the term reversal.
If there is no impairment loss to be reversed, any increase in the fair value is not recognized for cost model purposes. But since we have recorded an impairment loss of 18,000 in the second quarter, we are allowed to record a reversal, which is 2,850. And the amount of reversal that we are allowed, of course, is only up to 18,000 pesos. And since the reversal in the fourth quarter is only 2,850, which is below 18, so this can be recognized as a full reversal of 2,850 pesos. And in the income statement for the fourth quarter, the depreciation that will appear is 19,000 pesos, and a reversal of impairment loss, which is normally presented as a gain on reversal of 2,850 pesos. And in the statement of financial position, the equipment that will appear will have a carrying value of 306,850. Again, the statement of financial position at the end of the fourth quarter will be 306,850, not 304,000 pesos. So now let us proceed to the annual report. So of course, the annual report will start on January 1, and the beginning balance of the carrying value of the equipment is 400,000 pesos, and that is the January 1 balance of the equipment. And since this is the annual reporting, the depreciation expense to be recorded is for 12 months, and that is 78,000, and that is the total of the depreciation expense recorded during each quarter. Then an impairment loss of 15,150. So we're going to present the impairment loss net already of the reversal or gain on reversal of impairment loss. So that is 15,150. So that is 18,000 less 2,850 pesos. So the book value that will appear in the December 31 of the current year is 306,850 pesos. So if you notice, the recognition of the impairment loss is similar to that of the annual reporting.
So now let us proceed to letter F. So on June 1 of the current year, the entity sold the land with a cost of 200,000 for 180,000 pesos. So based on letter E, we have a land with a total cost of 1.5 million pesos, and only 200,000 of that is sold on June 1. So June 1, of course, is in the second quarter. This transaction will result to either gain or loss from the sale of the land. And regardless whether it is a gain or loss, the recognition principle would be the gain and the loss will be recorded or recognized when it is realized, and that is on June 1. So the gain or loss will be recorded outright immediately on June 1 upon sale. It will not be spread out during the 4 quarters of the year. So it will only be reported in one quarter, and that is the second quarter. And for annual purposes, of course, regardless of the quarter it has been realized, it will be presented in the annual income statement. So let us start with the computation of the gain or loss. And again, that will be in the second quarter. So the selling price is 180,000 pesos and the cost is 200,000 pesos. So obviously we have a loss on sale of 20,000 pesos. And again, this will be immediately recognized in second quarter, specifically June 1. Again, the 20,000 pesos will not be allocated among the 4 quarters of the year. So it will be recognized only for one quarter. Then for annual purposes, it will be presented in the income statement at 20,000 pesos. So now let us proceed to letter G. The entity paid on January 4 of the current year its annual real property tax of 15,000 pesos. So the real property tax will cover one whole year because this is the annual property tax. So this is 15,000 pesos. So it means that the 15,000 pesos must be recognized all throughout the 4 quarters of the year. So it will not be recognized immediately in full on January 4 because the benefit that the entity will realize from the 15,000 pesos is throughout the year. So that is why the 15,000 should be recognized as expensed during the 4 quarters of the year. So this means that the 15,000 pesos shall not be recognized as an expense outright or immediately. Instead, it will be recognized based on a systematic allocation, and that is the straight line method. So the 15,000 will be allocated evenly throughout the year. So let's start with the first quarter. So for the first quarter, we have a payment of 15,000 pesos. Of course, on January 4th, since there is no benefit yet from the 15,000 payment, it will be recorded initially as a prepaid expense. Again, it is not yet an expense, but it will be recorded as an asset under the title Prepaid Expense. Then, since in the first quarter, 3 months will expire, it means that out of 15,000 pesos, 3 months should already be recognized as expense. So the amount that will be recognized as expense is 15,000 times 3 over 12, and that is 3,750, or just 15,000 divided by 4. So it means that there is an ending balance of 11,250, and this will be the prepaid expense or prepaid real property tax that is still unused as of the end of the first quarter, and this will appear in the statement of financial position as of March 31 of the current year. But for the income statement, the real property tax expense that will only appear in the first quarter income statement is 3,750 pesos. So now let us proceed to the second quarter. So of course, as of the start of the second quarter, we have a beginning balance of 11,250. So the 11,250 will be expired for the remaining 9 months of the year. So for the second quarter, of course, there is another 3 months that will expire, and that will equal to 3,750. And the real property tax expense that will appear in the second quarter income statement, which is the non-cumulative income statement, is 3,750. And the ending balance of the prepaid real property tax that will appear in the statement of financial position as of June 30 of the current year is 7,500. So the 7,500 will be expired for the remaining half of the year. So of course, same procedure for third quarter. So we are going to start with a balance of 7,500, and again, another 3 months will expire, which is also at 3,750. That is why the ending balance would be 3,750, which will be expired for the last quarter of the year. So that is why the 3,750 expense that will appear in the fourth quarter non-cumulative income statement is 3,750. And by the end of the year, there will be no balance that will appear in the statement of financial position as a prepaid real property tax, because the prepaid real property tax has already been expired or expensed all throughout the 4 quarters of the year. And for annual reporting purposes, of course, the payment of 15,000 will be expensed in full as far as the annual reporting is concerned. That is why there will be no prepaid real property tax that will appear in the December 31 of the current year statement of financial position. Again, this type of expense is similar to depreciation, where we allocate the expense based on a systematic allocation or systematic method, because the expenses or the 15,000 payment will benefit the entity throughout the year, not just one point in time. So now letter H, the entity has a 2-year magazine subscription starting May 1 of the current year for a monthly price of 2,000 pesos. The entity paid the subscription price in full in September. So again, letter H is similar to letter G, where the payment of expense will not benefit only one time. The entity will be benefited from the payment for a period of time, and that is for 2 years, which is the 2-year magazine subscription. Because in letter G, the entity benefited from the payment of real property tax for 12 months. So this time we have 2 years. So it means that the payment or the 2000 magazine subscription shall be recognized evenly all throughout the 2-year magazine subscription. Regardless of the timing of payment, the expenses must be recognized starting the month the entity already benefited from the magazine subscription, in which is on May 1. So we are going to recognize a subscription expense in May because that is the start of the magazine subscription. So let us start with the first quarter. So in the first quarter, there will be no recognition of expense because again, the start of the contract is on May 1. So it means that we are going to recognize expense starting May 1, which is in the second quarter. So in the second quarter, we are going to recognize subscription expense for 2 months for May and June, and that will be 4,000 pesos. Again, it will only cover 2 months, May and June. And since this is not yet paid, it means this will be an accrued magazine subscription, which is a liability account. So as of the end of the second quarter, the entity will present an accrued liability or accrued expense magazine subscription of 4,000 in its statement of financial position as of the end of the second quarter. And in its second quarter income statement, which is the non-cumulative income statement, the subscription expense that will appear is 4,000 pesos. Then let's proceed to third quarter. So in the third quarter, so we have a beginning balance of the accrued liability or accrued magazine subscription of 4,000 pesos. And of course, the payment has been made in September. Then the payment is in full. So the full payment for the magazine subscription has a total of 48,000 pesos, which is 2,000 times 24 months, which covers 2 years of magazine subscription. So it means by this time, the 4,000 liability at the start of the third quarter has already been paid in full, and in fact, the entity will now have a prepaid magazine subscription. So again, as of this time, we now have a prepaid magazine subscription. However, regardless of the amount paid, the amount of expense that still needs to be recognized for the third quarter, which covers July to September, is only for 3 months, and that will be 6,000 pesos. So at the end of the third quarter, we have a 38,000 pesos prepaid magazine subscription. So the 38,000 pesos is the remaining amount to be recognized as an expense for the remainder of the contract. And again, as of the end of the third quarter, the entity will no longer present an accrued liability. Instead, the entity will present a prepaid magazine subscription, and of course, this will be in the statement of financial position. However, for the income statement, the amount of subscription expense will now become 6,000 pesos. Then let's proceed to the fourth quarter. So in the fourth quarter, our starting prepaid subscription is 38,000 pesos, and another 3 months will expire, which is also 6,000. So we have an ending balance of our prepaid magazine subscription of 32,000 pesos. And of course, the 32,000 pesos prepaid magazine subscription will appear in the statement of financial position, and in the income statement, the subscription expense will be 6,000 pesos. Then, for the annual reporting, we have a payment of 48,000 pesos because as of the year, the beginning of the year is January, and we have no accrual or prepayments at the start of the year. That is why there will be no beginning balance. But the payment is already a total of 48,000 pesos, and we have already incurred a total expense of 16,000 pesos, which covers 8 months of the year. And similar to the end of the fourth quarter, the balance of the prepaid subscription is 32,000 pesos. And this will appear in the annual statement of financial position. And in the annual income statement, the magazine subscription expense that will appear is 16,000 pesos. So now let us proceed to letter I. So the entity has a warranty contract of 2 years. The entity estimates that warranty repairs in the first and second year of the warranty contract will be 2% and 3% of sales respectively. The actual warranty cost of the entity for each quarter are as follows. So we have 10,000, 16,000, 28,000, and 30,000 pesos for each quarter. In the third quarter, the entity revised its estimated warranty during the first year of warranty contract at 3%. So in this case, we have a warranty, which is a type of expense. And in intermediate accounting too, we have learned that there are two ways to recognize warranty expense. First is the expense as incurred approach, which is the application of cash basis, where we record warranty expense upon payment of warranty services. And the other is the accrual approach, which we always use because for accounting purposes, we are using the accrual basis of accounting. And under the accrual approach, we are recognizing warranty expense based on estimate. So for interim reporting purposes, we are going to apply the cause and effect principle. So why is it cause and effect? Because warranty is the effect of the sales generated by the entity. So if there is no sales, there will be no warranty liability on the part of the entity. So if there is a sales generated by the entity during this particular interim period, there must be a corresponding warranty expense, which is the effect, that must also be recorded during that same interim reporting period. Of course, that is based on the matching principle. So for warranty, is this an expense recognized at a point in time or during a period of time? So this is recognized at a point in time, which is at the point of sale. Just like what I have said, if there is a sale, the corresponding or the related warranty expense should also be recognized during that time of sale. Although the warranty contract is good for 2 years, we do not spread out the warranty expense during the warranty period, nor we spread out the warranty expense during the year, because the warranty expense must be immediately recognized at the point of sale, following the cause and effect principle. So now let us start with the first quarter. So for the first quarter, our sales, so I will use the cumulative amount. So for the first quarter, that is 2.1 million. That is for the first 3 months of the year. Then our estimate is 5%. And how did we get 5%? That is the total of 2% and 3%. So that is 5% for the 2 years warranty contract. Again, the breakdown of the 5% is that 2% will be repaired during the first year of the warranty contract, and the 3% will be during the second year of the warranty contract. So it means out of 2.1 million pesos, the expected warranty expense or the expected warranty cost that will be paid by the entity is 105,000 pesos. So this is the warranty expense. Actually, this is not yet the actual warranty expense, because based on the problem, the actual warranty cost paid by the entity is 10,000 pesos, but our estimate is 105,000 pesos. And since we are following the accrual basis of accounting, we are going to recognize a warranty expense of 105,000. This is for the first quarter interim period, and that will appear in the income statement for the first quarter. So we have 105,000 pesos. So I have a cumulative amount and non-cumulative amount. Why do I need to present a cumulative amount? Because we have a revision of the estimated warranty expense during the year. And this will facilitate our computation later on. So now let us proceed to the second quarter. So for the second quarter, the cumulative sales is 4,330,000 pesos. Again, the sales amount is the sales we have computed based on FOB destination. So since this is for the second quarter multiplied by 5%,
So our warranty expense for the first 6 months, because this is a cumulative amount, is 216,500 pesos. And so we are going to prepare the second quarter income statement, which is the non-cumulative, which only covers 3 months from April to June. We are going to deduct the 105,000 pesos, which is the prior quarter warranty expense of 105,000 pesos, which is already included in the 216,500 pesos. And the remainder will be the warranty expense to be recognized for the second quarter, which is 111,500. And again, this amount will appear in the second quarter income statement, which will cover the operations from April to June. Then let's proceed to the third quarter. So in the third quarter, there is a revision in the estimate. So according to the last sentence in the third quarter, the entity revised its estimated warranty during the first year of warranty contract at 3%. So based on the problem, the initial estimate during the first year of the warranty contract is 2%. And in the second year of the warranty contract, we have 3%. So between these two, the percentage that is revised is the 2%. So from 2, it was revised to 3%. So basically what happened is the estimate for the first year and the second year of the warranty contract is now both at 3%, which has a total of 6%. So the revision of the 6% estimated warranty will not only apply starting the third quarter of the year. It will apply for the whole year, which will start in January. So since we already have recorded a warranty expense during the first 6 months, first quarter and second quarter, at 5%, since we have a revision of 6% and the 6% must be applied starting January, that is why we need to compute for the warranty expense that has been recorded since the first quarter, which is the cumulative amount. So now let us start the computation. So the sales for the first 9 months, which is the cumulative amount, is 7,685,000 pesos. And this is for the first 9 months, which started January. And the revised estimated warranty percentage is 6%. So it means that for the first 9 months, we should have already recorded a warranty expense of 461,100 pesos. Again, the 461,100 pesos should be the warranty expense that should have been recorded already for the first 9 months. And since we have already recorded a warranty expense during the first 6 months, which has a total of 216,500, which is computed at 5%, there is a need for an adjustment of 244,600, which is the warranty expense to be recorded during the third quarter. So if there is a revision of the estimate, there is no need to revise the previously presented warranty expense of 105,000 and 111,500. There is no need for a retrospective computation. If there is a change in estimate, the adjustments, the increase or decrease because of the estimate can be made in the succeeding interim period, which in this case, our adjustment is made in the third quarter. So by this time, we have already recorded a warranty expense equal to 6% of sales. Then last, let's proceed to the fourth quarter. So for the fourth quarter, the annual sales is 10,640,000. Then the estimated warranty percentage is 6%. So for the year, the warranty expense is 638,400, and this is for the year. Then the prior quarter warranty expense is 461,100, and our warranty expense to be recognized only for the fourth quarter, covering October to December's operations, that is 177,300 pesos. Again, I am only using the cumulative amount of warranty expense because we have a revision of the estimated warranty percentage during the year. If there is no revision, there is no need to compute for the cumulative amount. We can just simply multiply the percentage with the sales for that particular quarter, which is the non-cumulative sales. But since we have a revision, there is a need to compute for the cumulative. Then of course, for the annual reporting,
Our warranty expense for the year, one whole year, is 638,400 pesos, which is already at 6%. Again, if there is a change in estimate, the estimate will be applied since the start of the year, which is January. So after we're done with the computation of the warranty expense, let us now proceed to the computation of estimated warranty liability. Again, this is the amount that will appear in the non-cumulative income statement for each quarter. And we are going to compute for the liability that will appear in the statement of financial position. So to start with, we have a warranty expense recognized in the first quarter for 105,000 pesos. Then we have an actual warranty cost, which is 10,000 pesos. Of course, this is a decrease from the 105,000 pesos warranty expense, which just simply means that out of 105,000, we have already paid 10,000 pesos. And the remaining liability as of the end of the first quarter is 95,000 pesos. Then for the second quarter, so in the statement of financial position, as of the end of the first quarter, we have an estimated warranty liability of 95,000 pesos. Then in the second quarter, we will start with a beginning balance of 95,000 pesos. And we have recorded a warranty expense for the second quarter, which is 111,500. And let us deduct the actual warranty cost spent in the second quarter, which is 16,000 pesos. So 95,000 plus 111,500 less 16,000, we have an estimated warranty liability that will appear in the end of the second quarter statement of financial position for 190,500 pesos, which will be the beginning balance for the third quarter. Then we will add the warranty expense for the third quarter, which is 244,600, which already includes the adjustment from 5% to 6%. Again, if there is a change in the estimate, any adjustment in order to equal to 6% will be made in the period of change. So there will be no need for retrospective adjustment in the first and second quarter. Then let us deduct the third quarter actual warranty cost of 28,000 pesos. So our estimated warranty liability that will appear in the statement of financial position at the end of the third quarter is 407,100 pesos. So same procedure with the fourth quarter. We have a beginning balance of 407,100 plus 177,300 less the actual warranty cost of 30,000 pesos. And our ending balance at the end of the fourth quarter is 554,400, which is also the statement of financial position balance for annual purposes dated December 31 of the current year. So our warranty expense for the year that will appear in the income statement for the year ending December 31 is 638,400, and the total actual warranty cost for the year is 84,000 pesos. So letter J, in February of the current year, the entity was involved in a lawsuit as the defendant. The plaintiff is asking for a 1 million peso damages. However, the entity's legal department expects that it is not probable that the entity will lose the case. Moreover, due to evidences provided by the plaintiff in May of the same year, the entity estimated that it is now probable that it will pay total damages of 600,000 pesos to 800,000 pesos. In November, it was determined that the damages will be probable at 750,000 pesos. So this event will require us to recognize a provision in case the existing conditions will show that the criteria for a provision to be recognized are present. And of course, the criteria includes that there must be a present obligation that is probable and can be reasonably estimated. So the lawsuit occurred in February, and in February, the entities estimate that it is not probable. It means that there will be no provision to be recognized in February, because the requirement for us to recognize a provision, the present obligation should be probable. Then in May, the estimate of the entity has changed. So In May, it is now probable that the entity will lose the case and it will pay a total damages ranging from 600,000 to 800,000 pesos. So here we are given a range of possible amounts that the entity might pay. And in order to recognize a provision, of course, the best estimate shall be the amount to be recognized as an expense or a provision. And the midpoint of 600,000 and 800,000 pesos is of course 700,000 pesos, which is computed as the average of 600 and 800, or 600,000 plus 800,000 divided by 2. So the midpoint is 700,000 pesos. So in May, which is already in the second quarter, we are going to recognize an expense related to the lawsuit because again, the estimate has been changed in May because it is now probable and there is a best estimate that we can compute. So let us now start with the second quarter. And again, the loss on lawsuit that will be recognized is 700,000 pesos, which is the midpoint of 600 and 800. Then the estimated liability on lawsuit, which is a liability account that will appear in the statement of financial position as of the end of the second quarter, is 700,000 pesos. And again, the loss on lawsuit is an expense account that will appear in the income statement for the second quarter. Then another information, which is the last sentence. In November, it was determined that the damages will be probable at 750,000 pesos. So now there has been a change in the estimate from 700,000 pesos. It has now increased to 750,000 pesos. So previously in the second quarter, we have already recorded the best estimate as of that time, which is 700,000 pesos. And since there is a change in the best estimate, so we assumed that between 700 and 750, the better estimate is, of course, the recent estimate of 750,000 pesos. So since we have already recorded a 700,000 pesos loss on lawsuit in the second quarter, we are not going to recognize 750,000 pesos in full. So instead, we are just going to make an adjustment in the fourth quarter, which is in November, so that the total loss on lawsuit that we have recognized will equal to 750,000 pesos. And so we have already recorded 700,000 pesos. To make it 750, we need an adjustment of additional 50,000 pesos to be recognized as an additional loss on lawsuit, and that will be in the fourth quarter. So that will be 50,000 pesos. And the estimated liability on lawsuit that will appear as of the end of the fourth quarter is, of course, should be already at 750,000 pesos. So again, in the statement of financial position as of the end of the fourth quarter, the estimated liability on lawsuit is 750,000 pesos. And the loss on lawsuit that will appear in the fourth quarter is not 750,000 pesos. It should be the adjustment only of 50,000 pesos. And in the third quarter, of course, there will be no adjustments. There will be no loss on lawsuit that will appear in the income statement. However, there must be a liability on lawsuit that will appear in the statement of financial position as of the end of the third quarter, and that should be the amount before the change in estimate, which is 700,000 pesos. But for the annual financial statement, of course, the amount of loss on lawsuit that should appear in the annual income statement is 750,000 pesos, which is the best estimate made during the year. And as of the end of the year, the statement of financial position should present an estimated liability on lawsuit of 750,000 pesos. So again, if there are changes in the estimate in the succeeding quarters or in the succeeding interim periods, we will no longer recognize the full amount. Instead, we're just going to recognize the adjustment, whether it be an increase or decrease from the previous amount recorded. So let us now proceed to letter K. The following are the expenses that the entity has paid during the year. So we have salaries, rent, and utilities. Of course, this information are all cash payments. Of course, for accounting purposes, we do not record expenses based on cash payment. Of course, expense recognition must be based on accrual basis. So to determine the accrual basis expense of salaries, rent, and utilities, so we need to consider the additional information. So the following accrual of expenses are adjusted at the end of every quarter. So again, similar to annual reporting, so in the preparation of the annual financial statements, we are making adjustments for accrual of expenses at the end of the year. So same procedure will be applied for interim purposes. So at the end of every quarter, which is our interim period, we need to prepare an adjusting entry and we need to accrue expenses that are not yet paid. So let us start with first quarter. So for the first quarter, the salaries expense would be 21,000 pesos. And this is computed as 3,000, which is the ending balance of the accrued salaries at the end of the first quarter, plus the payment for salaries of 20,000 pesos, less the beginning balance of salaries payable of 2,000 pesos, because the 2,000 pesos is the ending balance of the salaries payable as of the fourth quarter of the prior year. However, for rent, since there is no accrual of rent, so this time the amount of rent paid during the first quarter shall also be the amount of rent expense that will appear in the income statement for the first quarter. So, but for utilities, same procedure as in the computation of salaries expense. So that will be 15,700 pesos. And this is computed as 15,000 pesos plus 1,500 less 800 pesos, which is the beginning utilities payable. So now let us proceed to the second quarter. So same procedure. So for the salaries expense, that will be 26,000 pesos. So that is the ending balance of 4,000 plus the payment of 25,000 less the beginning balance of 3,000. Then for rent expense, same as in first quarter, which is based on cash payment because we have no beginning or ending balances for rent payable. Then for our utilities expense, this is computed as 18,000 plus 2,000 less 1,500 pesos. Then same procedure for third quarter, the salaries expense is 24,500, computed as 26 plus 25 less 4,000. Then for the rent expense, we have 5,000. Utilities expense is 16,000 plus 1,750 less 2,000 pesos. Then for the fourth quarter, salaries expense will be 27,500 computed as this. Then for rent expense, we have 5,000. Then utilities expense is computed as 17,500 plus 1,900 less 1,750 pesos. But for the annual reporting, our salaries expense will be 99,000 pesos. This is the total of all salaries expense that has been presented in the income statement for each quarter during the current year. Or it may be computed as 6,000 plus all the salaries payment less the beginning balance of salaries payable. Then for the rent expense, our total rent expense is 20,000 pesos. Then for the utilities expense, the total utilities expense in the annual income statement is 67,600, which is the total of the four utilities expense recognized in each quarter, or it could be computed as ending of 19 plus all payments for utilities less the beginning balance of 800 pesos. So these are the amounts that will appear in the income statement. So these are for the quarterly income statement, which is non-cumulative, and this is for the annual income statement. Then for the statement of financial position, of course, the amount that will appear is the liability account. For each of these accounts, salaries, rent, and utilities. But based on the information given above, the accounts that have ending balances are only salaries and utilities payable, and the amount of accrued expenses, which are salaries payable and utilities payable, that will appear in the statement of financial position are the ending balances of these accruals. So that will be 3,015. So basically, these amounts were just taken from the information given. And for the statement of financial position, for the year, of course, that will be similar to that of the fourth quarter.
So now let us proceed to letter L. So letter L states that the entity's income tax rate is 30%. So the last expense that we are going to compute is the income tax expense. So it is at 30%. And of course, it will be based on the net income before tax. So our computation of the income tax expense will be based on the assumption that there are no differences between the accounting income and taxable income. And again, when we say differences, it pertains to permanent and temporary differences. So again, our assumption is that there are no temporary or permanent differences between accounting income and taxable income. To compute for the net income before tax, it means we need to prepare the income statement. So the income statement will be prepared in two sets. One is cumulative and the other one is non-cumulative. So since our reporting period is on a quarterly basis, so we have four interim reports or interim income statement that will be prepared during the year. So now let us prepare the income statement. So first, for the first quarter. So for the first quarter, since this is the very first interim reporting period of the current year, we are going to prepare only one set of income statement because regardless whether it is cumulative and non-cumulative, the first quarter will always cover January to March. So for the first quarter income statement, so this is the computation of the net income before tax. So our net income before tax is 453,050 pesos. And these amounts were taken from the computation that we did in the previous sections of the problem. And now let us proceed to the second quarter. Now for the second quarter, this will cover the months of April to June because we are preparing the non-cumulative income statement. So this will only cover 3 months of operating results. And again, these amounts were taken from the computation that we did a while ago. So now for the second quarter, we don't have an net income before tax. Instead, we have a loss of 146,250 pesos. Then for the third quarter, so again, these are the figures that were taken from the previous computation. So this covers the operating results from the months of July to September. Then lastly, the fourth quarter income statement, which covers the operating results from October to December of the current year. So now we have computed the net income before tax. We can now determine the income tax expense or the income tax benefit. So for the first quarter, we have 135,915 income tax expense. Then for the second quarter, we have a 43,875, and this is income tax benefit. Since in the second quarter, we don't have an income, instead we have a net loss of 146,250. And again, these are computed at 30% of the NIBT. Then for the third quarter, our income tax expense is 187,620, which is simply at 30% of NIBT. Then for the fourth quarter, we have 491,475 pesos. Then after this, we can now compute the net income after tax, which is the difference between the NIBT and the income tax expense. So this computation of the income tax expense, where we just simply multiply the tax rate to the NIBT, which is the non-cumulative NIBT, this is only applicable if there are no changes in the tax rate during the accounting period. Because if there are changes in the tax rate during the accounting period, and the effect of the change will be applicable to the whole accounting period, the computation of the income tax expense will not be based on the non-cumulative NIBT. Instead, it should be based on the cumulative NIBT, which will be computed or determined when we prepare the cumulative income statement, which is the second set of the interim income statement for interim reporting purposes. So since we are preparing two sets of income statement, so we're now done with the non-cumulative. So let's proceed to the cumulative income statement. So of course, the cumulative income statement for interim reporting purposes will only start in the second quarter. So the second quarter cumulative income statement will cover the operating results from January to June of the current year. So here is our cumulative income statement for the second quarter. Again, this will cover the 6-month period starting January to June of the current year. So these are just totals of the operating results again from January to June. Then for the third quarter, of course, it will cover 9 months of operating results starting January to September of the current year. So again, these are just totals of the operating result from January to September of the current accounting period. Then lastly is the fourth quarter cumulative income statement. Of course, the cumulative income statement that will be prepared during the fourth quarter is the annual income statement because it will already cover 12 months of operating results. So again, if there are changes in the income tax rate during the current year and it will affect the whole accounting period, the best way to compute for the income tax expense is to compute for the net income before tax on a cumulative basis because we need to compute the income tax expense of the entity for the whole accounting period. So since we have no changes in the income tax rate, so this income tax expense is simply at 30% of the NIBT. But if there are changes in the income tax rate, of course, the tax rate that will be used will be the revised income tax rate. So this ends our discussion for interim financial reporting.